The Picoin crash, what's really going on here? Is this just another case of crypto hype gone wrong, or is there something deeper at play beneath the surface? Since the Pi network's mainnet launch in February, Pi's hype went through the roof. Social media was buzzing, Telegram groups exploded, and everyone seemed to want a piece of the action. For a moment it felt like Pi was the next big thing in crypto, promising to democratize digital currency and reward everyday users. But now the tables have turned, and it's crashing down just as fast. The price? Down 80% from its all-time high. That's a staggering loss for anyone who bought in at the peak, and it's left a lot of people wondering if Pi can recover or if this is just the beginning of a long downward spiral. Yeah, you heard right. 8-0. That's not just a dip, that's a full-on nosedive, wiping out billions in value almost overnight. But while Pi coin holders are licking their wounds, the founders are sitting on a massive $13 billion mountain of tokens. It's a classic crypto story. The people who got in early, or who control the project, end up with the lion's share, while regular investors are left holding the bag. Let's dig in. Who really controls this thing? Because when it comes to crypto, who holds the keys often decides the fate of the project. Recent reports show there are around 100 billion Pi coins in total supply. That's a mind-boggling number, and it raises big questions about scarcity, value, and who stands to benefit as more coins hit the market. Of those, 65 billion have already gone out to users and pioneers. Sounds fair, right? Well, hang on. Because not all of those coins are actually in circulation. Many are still locked and users can't access or sell them yet. Here's where it gets spicy. Another 10 billion tokens are locked up for the Pi Network Foundation. Supposedly these are meant for the long-term health of the project, but there's little transparency about how or when they'll be used. And almost 20 billion coins? Those are controlled by the core team, mainly the founders Kokolis and Fan. That's a huge chunk of the supply in the hands of just two people, giving them enormous influence over the project's direction and the market itself. That's about $13.2 billion at current prices, just between the two of them. To put that in perspective, that's more than the market cap of many established cryptocurrencies. So yeah, if you're wondering, these guys are Pi billionaires, each sitting on a cool $6.6 billion from Pi alone. That's generational wealth, all from a project that's barely out of the gate. If you're finding this breakdown helpful, don't forget to hit that like button, drop a comment with your thoughts, and subscribe for more updates on Picoin and the latest in crypto. Your support helps us bring you more deep dives just like this. The parent company Social Chain has about 40 employees. But there's no evidence that anyone aside from the founders gets a slice of those 20 billion tokens. For a project that claims to be about community, that's a pretty centralized setup. Even the foundation's 10 billion coins worth another $6.6 billion seem to be under their control. The structure's murky, and that's making the community nervous. People are starting to ask tough questions about governance, transparency, and whether the project is really as decentralized as it claims. But wait, there's more. Some of the 65 billion distributed Pi is still locked up and can't be touched by users just yet. That means a lot of holders are sitting on paper gains they can't actually realize. These coins are being unlocked. 131.2 million every single month until May 2028. That's a slow drip, but over time it adds up to a massive increase in circulating supply. At today's prices, that's $87 million released into the wild every month. It's like a constant stream of new coins flooding the market, and that kind of supply pressure can be brutal for prices. Many in the community worry this steady drip will keep pushing prices down. Every month, more coins hit exchanges, and unless demand keeps up, the price could keep sliding. So where's the price now? After a brief run-up to 75 cents, Pi crashed back to around 65 cents, now just consolidating, stuck in no man's land. It's a waiting game with both sides hoping for a breakout, but no one's sure which way it'll go. The RSI has dipped below 50, signaling a bearish trend, and the ADX is hovering near 24, suggesting the trend is losing steam. Technicals aren't looking great, and traders are getting cautious. Neither bulls nor bears are in control. The market's in a stalemate, and everyone's waiting for the next big move. But here's the real question. Is the Pi network just too centralized to trust? With so much power in the hands of so few, can it really deliver on its promises of decentralization and fairness? The founders keep getting richer, while regular holders are left to watch the price slide. It's a dynamic that's played out in crypto before, and it rarely ends well for the little guy. Sure, it's not the first time a crypto project's founders have cashed in big. We've seen it with other coins. Early insiders walk away with fortunes, while latecomers are left with losses. But with so much Pi in so few hands, it's no wonder people are worried. The concentration of wealth and power is hard to ignore, and it's fueling skepticism across the crypto world. So, Picoin holders, what do you think? Is this just another crypto billionaire story or a warning sign to stay away? Are you holding, selling, or just watching from the sidelines as the drama unfolds? Drop your thoughts below, and as always, do your own research. In a world where fortunes can be made or lost overnight, staying informed is your best defense.